Now, your money masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. Hope everyone's having a great day, safe day. Let's take a look at the markets out here. You get the Dow up 41, Nasdaq up 11, S&Ps are up 4.5. We get gold up 4, silver's up 31. Light sweet crude is up 57. You get bonds down 25 ticks, and King dollar is up 26. And you talk about.
Can't keep the king down, baby.
Can't keep the king down. And, let me tell you, folks, whoever was laying in wait for that dollar, they not only goosed it yesterday, but you can expect it's not going to stop. They're going to goose it again today. And the reason I'm saying that, you can tell how the market is acting right now.
Yeah.
High volatility, brings it back up, gets the bears scared, gets the bulls all giddy again, bang, hits it again. Once this comes in, which we have right now, you'll see it for quite a while now. And when I say quite a while, more than likely, 6-7 weeks. That's how this normally shakes and bakes. So
when you take a look at, obviously the big news out there was, I thought, part of the big news was gold. Just simply the way that just simply got hammered yesterday. That was quite a movement yesterday. And you were paying attention, during the 10 o'clock show, you were looking at the correlation of the dollar index, the euro, and gold. All three of those were being, you're able to see the culprits out there.
Big time.
Right away.
And gold's not out of trouble here. Gold, when I was bringing up yesterday what I think it's going to do, it's doing it. And, will this next leg down, I don't think we'll see it for another 4 or 5 days or something, but you can see that we just got a nice little spike in it. We just went from 16.95 up to 17.16. But you can see what we're doing that with, folks, is 3,000 contracts versus 31. The 31 is going to be dangerous.
And
each contract right now is $176,000 bucks. 171,000. When you put up 10, you put up 10. This is some real leverage, man. So picture this yesterday. Yesterday, you're putting up 10. They were hitting stops everywhere because, it was a $10,000 loss. And that was a full contract loss. Because you're only putting up 10.
Right. No, the number of days, the price destruction in one day, in 6 hours. Was intense. Full month.
And that's what happens with markets that basically can't handle price. There's 6 hours takes back a month. I've seen 6 hours take back 2.5. 6 hours always takes back 2.5 weeks, folks. That's a no-brainer. In fact, the bulls and bears were fighting inside the den, and one of them saying, well, the bears don't have to be in the market a long period of time. And I absolutely agree with him.
That's true.
What happens if you don't trade both sides of the market, folks, okay? Plenty of bulls think that bears are only bears. Most bears I've seen will trade both sides of the markets. But the reality is that until you've been on both sides of the markets go down much faster than they go up. And when they go down, you're prepared, and most bears are prepared when they go down. And you take it to the cleaners, and you do a lot of work, and then you wait for another month and a half, and then you hit again.
Now, Davy Jones passed away yesterday.
I know, what a bummer. I think we just played. I forgot that the Monkees had so many songs. Great songs.
So many songs, and he continued to tour around. He would be at Epcot every year during their Flower Power series. So great entertainer, great guy. But one of their songs, one of the lyrics in there, "I'm a believer." Well, I want you to tell folks about the Nadex trade, because you talk about being a believer, and what you did yesterday on that, the amount of the risk reward on that, it is such a cool trade that you put on. So you just got to at least share that with the folks out there.
Okay, so I'll bring this up right now, folks. We can bring this up anyway, because I did a couple more this morning. So you got to picture first off what happens. Now, if you haven't opened a demo account, go over to our website at TFNN and open a demo account. Hit the Nadex banner, and now the ones that I would start with, even in that demo account, I would just start with the binaries. And what the binaries are is it's a yes or no. That's all you're saying. Will it close above or below at a certain point?
Right.
Well, Now, it's
by a certain time.
By a certain time.
Because you did a couple yesterday. You did one by around 11 o'clock.
I did one
and
by...
then one at 4:15.
That's right. So, first off, let me tell you what I'm doing first. All I'm doing is that because everything is intraday, it doesn't have to be intraday, but
but when you're doing it, when you're trading.
That's right.
Yeah.
I mean, when I'm trading intraday.
Yeah.
So, first off, what I did is this. I says, okay. Now, the thing that's amazing about this is going to blow your mind, folks. The thing that's amazing is that there wasn't a huge amount of movement even yesterday. And when you see this bread, you're not going to believe it. Well, you'll believe it because you can see it right in the account. But the reality is that what happens is that all I'm looking for on a continual basis and say, okay, now, where's the volume in the marketplace and where's the testing?
Yes.
And then what you want to do, though, this is the key inside the Nadex. There's no two ways about it. The key is that you want to be risking, well, the way I'm doing it right now, let's put it this way, the way I'm doing it right now is that I'm saying, okay, my probability that it's going to go down where the volume is pretty good.
Right.
So what I'm looking for is that I'm looking for a risk parameter that I can think out of so many times, let's say out of 10 times, if I can be right 5, that's great. But why do you see when you put the money management together with it, what you can do?
Yeah.
So what happens, folks, is this. Let's just take a $10,000 chunk. That's 100 contracts, $10,000 chunk.
Yes.
What I've been doing is I'm saying, in the market, it's like, okay, can I risk 500 to make 10,000?
Right. Right.
And now what happens on that trade, this is what's really wild on that too, okay, is that we're not talking a lot of ticks. And I'll show you, we can do the one from yesterday right there.
Yeah.
Let's see, is that yesterday right there?
I think you're yesterday.
Here's yesterday right here. Okay.
Yeah.
So when we take a look at yesterday, yesterday we were at 1377 at 10 o'clock in the morning. Okay? So there's one trade that was saying, okay, can you be under, at 1377, one trade was saying, okay, can you be under 1369 by 11?
Right.
Okay?
Right.
Now that trade there, okay, so that was only 7 points, 7 S&P points. That trade there cost me $550.
For how many contracts?
For 100.
For 100 contracts.
So I was risking that to make 10,000.
Right.
Bottom line, the 10,000 come in.
Yeah.
Turned around.
That wasn't the best trade of the day.
No, it wasn't. It wasn't. Because what ended up happening,
which is kind of
there was 3 more. The bottom line is that the risk from the morning to the afternoon, it was $825 for 45,000.
Yeah.
And I just missed another 30,000 by 2 S&P points, which is pretty amazing. But so the key is this, though. This is what I found out so far. Now, this is what's pretty cool. Like this morning, I just hit. Let me see what we did this morning. The key is, okay, so here, I'll just go a simple way into the math in this, okay? If you're risking 500, right? Yeah. That means that I have to be wrong 20 times.
Right.
It's not going to happen. Well, it could happen, okay? But I like that. I like that parameter, particularly because I'm not just saying red or green. What I'm saying is I'm looking with where the test is going to come in, and that's all I'm looking for. Like if you're watching on my screen right now, all I was looking, I says, hold it. When this was up here, I says, hold it. This wants to go test that high volume. See, we had a high volume spike with 51,000 contracts down at 1366.
Right.
You know?
Right.
And, that was saying, okay, it wants to do it. So what you have to, the way I've seen it thus far is this. It's the number of times that you think you can be wrong.
Yeah.
What you're risking, right, versus where the volume is on these contracts.
Right.
And I like this. So this morning.
So this morning, you're looking at what came in at 4:10 yesterday afternoon. Are you
this is what I did this morning. So this morning, let me get this closer first, and I'll put it up here so I can see.
Yeah.
Okay, so I have 1367.
Okay.
Okay, 1367 by 11 a.m. And that one there, now check this one out. That one there cost me $1,200. $1,200 to make 10,000. So if it's 1367 by 11 a.m., that's 10 G's.
Yeah, and where you were going with that was at what time frame? At 10:50 yesterday?
No, I did this this morning.
Okay,
right
but what were you going against? How were you identifying the 1367?
And what I was doing is this. So what I was doing is that you were coming up to ice.
Yeah.
Okay. So ICE had 130,000 contracts.
Yeah.
We got into that with 50,000, and then right when I was walking in here, it spiked down, which was, I just looked, I said, you're going to be kidding me.
But it spiked down with 168,000 or so.
Oh, yeah, no, it's going to be back down there.
Yeah.
It's going to be back down there. And so that's at the 11 o'clock one. Then, now the difference is at the 11 o'clock one, it's a time range deal, too.
Yes.
Then at the end of the day, I have two separate ones. It cost me, I only have one. Okay, $13.65.
Yeah.
At the end of the day, that cost me $14.50.
Yeah.
For 10,000. That's what we have on right now. So it's the thing that's intriguing about these, I think, is that if you have high volume highs,
yes,
or high volume lows, that's what you want to be going for.
Right. And then you're looking at 10-minute time frame charts in order to make those trading decisions.
Yes, I am. And what I'm not doing is that I'm not. There's other trades you can make there in a binary effort that would get you. That you'd be putting up. Let's say if you're putting up $40 to make 60, you're putting up 60 to lose 40.
Right.
What I've seen is that there's a disconnect.
Yeah.
As soon as you get 3 or 4 S&P points away, and I like that disconnect.
Okay. As far as putting the reward, you get a higher reward to risk.
That's right. Because imagine. So watch what happens. Right. That if I do those, right, you can be around 5 or 6 times in a heartbeat. Well, there's some real money gone. Right. I like the idea of that other type of leverage.
It absolutely worked yesterday.
Oh man. Let me tell you, I didn't tell anyone to the end of the day. And you should see, folks, I was this close to another 30 G's.
I know. You were telling David and I as you guys were making the changeover in here. So it's okay. You still made out on the trade.
Yeah. So and now we're gonna, tomorrow we're gonna wrap our head. I get. Those are the binaries. We're going to start wrapping our head around the spreads, too. It's Tom O'Brien, TFNN. You stay right there, folks. We're coming right back. Leaves the Dow up 46, NASDAQ up 11, S&P's up 5, gold's up 10, silver's up 62 cents. We're going to be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Okay, so 8 points. 8. Yeah. Steve Rhodes, Tom O'Brien, folks, you stay right there. We'll see what happens with this good old dollar here. So, dollar-wise, let's go look at this buck. Dollar. This is getting to be too much fun. Oh, my God.
I love it.
I'm telling you. Okay, so King Dollar, 78.95 high, 78.73. That's where it is right now. That's all right. I see what it's doing. Okay, so you had the acceleration up yesterday. You're coming back on dramatically lighter volume. You're into the 78. Okay, so we're at 78.72. This can get into 78.60 real easy. It's going back into the breakout area. It's doing it with lighter volume. Yeah. So you heard the news today about the credit default swaps that are never going to default again, right?
No.
No.
You know
what, folks?
It's coming out of Germany.
Out of Greece. Oh well, yeah. It's out of the. When you buy a credit default swap, okay, it's out of a derivative association that runs everything. The banks are that run it. And they decided that, bottom line, it was not a default again.
Really?
Yeah. And they're not getting... Really? So you take a haircut of 50, 60%, it's not a default. Now, what that does, though, this is what's really wild about it, right? If you don't think that the larger deal, folks, is a fixed game beyond belief. And they take all these companies to the cleaners, and they take them good. You know, I remember the first currency derivative that I saw blow up, and it was a Procter & Gamble derivative. I think this is in like 1982. And it was so weird because the last thing you thought of the Procter & Gamble, why would they buy a derivative number one?
Yeah.
And a bank sold them a derivative product. And this is when the derivatives were really fairly new. But they sold them before 82. I think it blew up in 82. And they lost billions. And the market was saying, what just happened?
Yeah.
But when I saw that news this morning, I says, you know what? That's how it's made. It's made by the banks, for the banks, to take the other big large. And I'm not talking about players like you and I, small players, folks, that just go in and out. These are created to take large companies south in a big way.
Yeah.
Yeah. And just imagine, you know, but you buy insurance and it doesn't get paid off.
I know.
And, you know, whether it's a computer, whether it's a house, I mean, they don't have it.
Yeah.
They don't have what they thought they had.
Yeah. No question. No question.
And so come out this morning also is on the MF Global deal, right?
Yeah, okay, I didn't see any news on that.
So the MF Global, folks, okay, right from the get-go, we figured J.P. Morgan has all the money, all the customer money.
Over in Europe.
Okay.
Over in Europe, in their accounts in Europe.
Yeah, that's right, and they do. You go look at the Wall Street Journal this morning, they do. They not only have it, what did happen, this is where J.P. Morgan's going to have to come back with some of this money. The reason I'm saying that, is that what they have now is that they know that they sent $165 million over into another account, and they knew it was a mistake, and they tried to get it back, and they wouldn't give it back to them. This is immediate. This is immediate.
Yeah.
They try to get it back immediately.
Yeah. And then this is the one assistant or what have you that was transferring funds. Is that tied into that deal?
I think it is tied into that deal, yeah. But they had the... they had the time frame today.
Yeah.
And what ended up happening, as soon as it was done, they realized, no, we can't do that. And they went back, and normally inside that system, you can bring it right back, and they wouldn't give it back.
I see, yeah.
He who has the cash wins.
Yeah.
No doubt.
That's for sure.
No doubt.
Absolutely.
So.
Yes, absolutely.
So listen, we are in Boston.
Yeah.
Tomorrow.
Couple days.
Today.
Tomorrow night. We'll be there tomorrow night.
Yeah.
We do the event on
and it's
Saturday.
snowing there today.
No, is it?
Angie's flying up. Angie's flying up there today to see our grandchildren. Yeah. So. It's terrible because...
No, I don't have snowshoes.
Oh, you don't need any snowshoes.
Okay, we're going to Airport Cab Hotel.
Oh, you should have seen Steve. Oh, you're going to crack up, folks. Steve is a Florida cracker in a big way. And what that is that's someone that's grown up in Florida. Out of our 5 children, Kyle has grown up in Florida, and you grow up in Florida, it gets... Well, here, let me tell you the story. We're in Spokane.
Yeah.
We get off the airport in Spokane. Now, picture, folks.
God.
Spokane, right, absolutely beautiful. You're flying in. I'm saying, oh, man, this place is gorgeous. The day we get into Spokane, it's probably like 42 degrees out, right? And there's a wind, okay? There's a wind. I go outside. Come on, let's go outside.
There was a hurricane.
He runs back inside.
There was a hurricane.
And he's standing at the window. I thought he was kidding with me first. And I looked. He said, I can't take this weather.
I didn't take out. I had my gloves. I didn't put my gloves on after your comment.
You were so funny.
It was cold. I had to save up my energy.
I understand it from Kyle, but it was funny. I thought it was absolutely hilarious. You stay right there, folks. Steve Rhodes, Tom O'Brien. We got Dave from Orlando. We got Tom from Boston. We're going to be coming right back. Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. And don't forget, folks, if you want to make 20 to 30% on your money, well, we have the Tiger Dollar promotion. The way that works is that you come over to TFNN. First off, the Tiger Dollars are good on all subscriptions at TFNN. No expiration date. They're transferable. We have that promotion going on from now until next Sunday, March 9th. If you do buy Tiger Dollars, you're going to be, you come to my Master Trader online. It's about an $8.99 value. That's going to be free. That's going to be March 29th. And what we're going to be doing there is going over all of time in the trade, particularly just what we're doing with the Nadex. We're going to be going over all of that. So if you want to see where markets go, where the volume goes, the ABC structures, the whole ball of wax, that's there.
Great. That'll be great.
And you can, it's right on the front page of TFNN.com.
Absolutely.
Let's go to Tom in Boston. Hey, Tom, what's going on?
Hey, Tom.
How you doing, man?
Pretty good. Yourself?
Good, thanks.
That's good. Hey, I'm looking at the TZA. Got in it last week, and just wondering what you think about that.
Yeah, the TZA, I think, is a great trade. When we were doing, in fact, for the folks in Boston and the folks in Tampa, the next two Go Long America road shows that Steve and I are doing, what you'll see is that the small caps folks have done a butterfly on a tiger butterfly at that on the daily, and a tiger Gartley on a 6-month weekly, and that's pure confluence, number one. And what you did have yesterday, you came down on volume. So you got what we got yesterday was confirmation that that baby wants to go lower.
Yeah, you came into that February 2nd. Yeah, where the market took off February 3rd. You gapped up, if you will, and that swing point had 46 million. You came in, I think it was 68,
64
million. So
it's subtle. There's no doubt about it. It's subtle, but that's what I'm always looking for. You look at expansion and volume as you get to lower price, and that's what we got.
Great. If you get a chance, just talk a little bit about the ZSL, if you could, and I will probably see you on Saturday.
That's a beautiful thing, man.
That'd be
Come
great.
on by.
All right.
So the ZSL, that's the ProShares Ultra Short Silver. And, bottom line, folks, when you get toasted and roasted like the market did yesterday, well, God bless you if you're a short. But you don't go short right here.
Yeah.
That is not what you do. If we take a look at silver, what you have is this. We're in a large consolidation, okay? If you wanted to go into the ZSL, you would love to see silver go all the way back up to about 36, 40, and it can. It can in a heartbeat.
Now, what is cool is that when you're taking a look actually at the silver contract,
yes, what
it did yesterday as it was spiking up before it actually went ahead and moved down with gold, if you will.
Right.
You had a 2.68 expansion.
Look at that.
Off of its most recent set of swing points. You had a 1.272 expansion.
Unbelievable.
Off of really the consolidation range.
Right.
That this was in, from the highs to the lows. And you had the 618 retracement coming all the way back here into the September time frame.
I think
you had everything going, everything at one time.
We probably should get some of those numbers tattooed.
Which is and then hey, we had Ellen came by yesterday, right?
Oh,
Sweet
that was so
cool. We talk about folks, tigers,
yeah,
coming in and just saying hello and visiting,
right?
And yeah, it was great.
And she came in right at the right time, folks, because you get a picture of something. Like I said to Steve, well, check this out. It's going to be amazing here, folks, okay? 2 days ago, on the afternoon show, and I said to the Tigers and Tigresses in the den, that was the first time, I think, in probably 3 or 4 years, in 2 hours, folks, I didn't get one phone call. And
during the shows, when you were doing the radio shows.
You know what? I'm sick of hearing myself saying the market's going down. Everyone else is sick of hearing it. No, but it's a great contrarian indicator. It really is.
No,
it is.
No, I know.
It absolutely is.
Look.
Hey, listen, I remember, I love the idea when the gold market was either going up or down. We knew
you could gauge it by phone calls.
Oh, you could, man. I knew that the buy wasn't there if too many people kept calling about gold. It wasn't even close. It was like, oh, man, hold it. I am not touching this thing. Because real money, folks, is always made by a minority. It's sad but true. It is. It's sick. I mean, it's a sick seed. But you know what? As you're growing up, just pay attention to it, and you'll see it.
Yeah.
No,
I know.
Let's go to Dave in Orlando. Hey, Dave, what's going on?
Hey, guys. Happy Thursday to you.
Happy Thursday, man. Thursday, man.
Hey,
times are flying.
First of all, I've been listening to you guys for 2 years now, and I have never heard people more concerned about educating their listeners than you guys.
Oh, thank you so much.
It's incredible. You listen to people, and they're so worried about selling their books or their opinions or everything. I mean, you guys just tell it like it is, whether you're a bull, whether you're a bear, trade both sides, do everything. And I can't tell you how much I appreciate it.
Well, we appreciate you growling and prowling out there with us. Yeah. We want everyone to fly like an eagle. See, the key in life, folks, okay, let me tell you something. We love doing this, okay? But this is not what gets me up. What gets me up, man, is just feeling like this.
Oh,
you know what I mean? Looking at you in the morning. Looking at you. Looking at Steve. My ears are cold.
Actually, the coolest part has been being out on the road during the show.
Oh, we had a blast, didn't we?
Talk about the energy.
I know.
That we build up just to get there and do it, and then what's released. It's actually that's right. As much as we enjoy doing these shows here, Dave, and everything, when we're actually out, live with folks. It's really a cool experience.
Yeah. But
really
we do appreciate it. And I love the thought process. I like just thinking. And I like people thinking. Do you know what I mean? Because you never know what's going to come up. You know what I mean?
Absolutely.
Yeah.
Absolutely. Well, I've got 2 questions for you. Tom, first of all, on your insights, do you think you're going to include the Nadex comments on that since we're starting to get into that now?
I will, but I won't do that. What's going to happen, my time schedule goes like this. I'm going to basically put real money up. I'm doing the demo right now. As soon as I go through the rest of these, which will be another couple weeks, I'm going to put real money up. Then I'm going to make sure I can make real money, and then I'll put it in.
Awesome.
That's how I kind of operate. You know what I mean? So the phony baloney money is doing great right now. You know what I mean? But as soon as I can do the real thing, and understand exactly what's going on, then yes, I will.
Yeah, because what he's also doing is taking a look at the different, take a look at the intraday charts.
Right.
Take a look at the shorter term, like the 11 o'clock, at the end of the trading session, going for the larger reward to risk trades that are out there. So just, trying to put together the right trading strategy.
That's right.
Absolutely. Again, just educating us, and I appreciate it. Hey, how about SDS?
So the SDS, folks, that's the 200% inverse correlation of the S&P. And that's not bad, but I'd push you into the small caps, I mean, the SDS also, got the SPY got down yesterday with volume, but it's like you can make the argument, okay, we go to higher high and a little juice come in or lower low. And that divergence is there.
And where I go with it is just if you can, from an educational thinking standpoint, if you're ever looking to go short, you want to find the weakest link out there.
Yeah.
And if you're looking to go long, you want to be able to find strength. So even if you're, if you're even taking a look at a sector, and you're looking at a subsector, maybe the XLF or the XLE or what have you. Well, not the XLE, kind of leave that one off to the side. But if you're looking at a sector, if you will, you want to find, if you're going long, you can also take a look at a couple of the individual stocks in there that are leading that thing. And go along, and short, look at the weakness down there. But now if you're going short, you got to make sure it's a high dollar stock. You're not going to short a 10 or a 20 or even a $30 stock. You get too much potential risk on the, something coming out to the upside. But so you want to short weakness and you want to buy strength.
Right. And what's cool about this, right, is that, you're hearing something really subtle from Steve and I. Well, he flat out, he's saying, get the weakest. But the thing that's so cool, which doesn't happen a lot, is that the small caps are still at the highs, too. It's not like we're saying that, hey, it's the weakest. I've seen people say, hey, it's the weakest, but, oh, man, it's down at the lows. It's like, no, that is not, this is the weakest, but we're still at the highs.
That's right.
And that's where you want to...
And none of the other, if you take a look, just, break it into the diamonds, the SPYs, the Qs, and the IWM, just to cover the market, if you will. Well, the small caps are the only one that have traded down into that February 2nd swing point.
Right.
The Qs have got a long way to go. The SPYs have got quite a ways to go. They're at 137.37 or so right now, and that's got to get into the 133.02. So where the small caps are trading inside it, basically right in the small caps, the IWM, the high on the second is 81.53. You're at 81.72 right now.
Yeah.
You're close.
Awesome. Well, guys, I appreciate it, and I will see you Tuesday night in Tampa.
Awesome, man.
That'll be great.
Have a great one. Have a safe one. And, folks, the Tampa workshop is at the Hyatt Regency in Tampa. That's going to be from 6:30 to 9:30 Tuesday night. The Boston workshop is at the Burlington Marriott.
Yeah.
And that's from 9 to 12. And if you're going to Boston or Tampa, you better sign up right now. And please don't sign up if you can't make it, because they're both going to be sold out.
Right.
And they're free. So come growl and prowl with us.
There's no cost to get in, but you got to bring your thinking cap, because we're going to make you think.
Yeah, right. Totally, man. No doubt about it. Let me see this contract again. So what do we got happening here? This. So she's gonna consolidate for a bit. Yeah. That's what it looks like. Little consolidation. Times are flying.
Market's been consolidating here for weeks.
Oh, man, let me tell you. Unbelievable.
Exactly.
Okay, so some of the high-volume stocks out here, what do we have? We get the Gap. The Gap gapped
up. I love that.
$1.82.
I loved it.
You get Advanced Micro up 29 cents. Let me just see. Let's go see what the Gap is doing. Oh, I know. Walmart, I heard the statistic this morning.
Okay.
So Walmart is paying a dividend. Big deal. Their dividend, just so you know, listen to this. This is pretty amazing. That the Walmart family owns 50% of the stock, right?
That alone is amazing.
And this gets better.
Take a look at
this gets better. 47.01 to be exact.
Yeah.
You know what 47.01 is on the dividend? They're going to pay this dividend?
Oh, so it's that's pretty interesting.
$3.4 billion they get. They get. It's a $7 billion dividend. Can you imagine taking in $200 million a month?
Oh my goodness.
It's more than that, isn't it? Yeah, it's more than that. They're taking in $250 billion a month.
That's interesting.
And dividend income.
Yeah, that's interesting.
Yeah, there's I don't know the woman, but one of the daughters lives in Maine. And one of the guys that I used to trade with a lot in Boston, this is back in the 90s, right? He was telling me he knows her.
Yeah.
And he said it's just amazing. He said she, left Arkansas, went up there and lived.
Yeah.
And the amount of money that she herself has put into the community, right?
Yeah.
Building businesses, he says it's amazing, you know?
which is very cool.
that's a lucky gene club. There's no doubt about that.
Yeah, that's pretty cool. Is there any other company out there like that where the family's got 50? I mean, there's probably some couple European, some of the larger
private companies probably.
Well, not private, but I mean, because that's pretty impressive when you got a market cap like that, and the family still owns 47%.
Yeah, well, because even if we go over to if you go big time, if you go to Microsoft, Bill Gates only has 5.9 right now.
Yeah, right. Which is that's more common.
Yeah,
than the family's got 47%. That's pretty. And so then you start talking about the dividends all coming back. Oh,
dividend income 15%.
Gotta love it.
How the heck would you keep your head straight? It'd be pretty hard. Man, I'd have a freaking huge boat.
Oh, I love it.
Oh, totally.
Boat.
Yeah.
Those are called ocean liners.
Yeah, ocean liner. And the show would be from an ocean liner. And you know what? We would be having a show.
That's right.
But you would see Tom O'Brien. I'm a plunger now. I couldn't imagine how I'd be plunging there. And you'd be screaming.
Too much.
What are you going to risk today?
I love it.
Let's go to Dudley in Orlando. Hey, Dudley, what's going on?
Yes, good morning, Tom.
How you doing, man?
Outstanding, Tom. Look, one question. I'm short. First Solar, FSLR. Could you give me a little direction here? I'm thinking about coming out at 30.
At 30. And so when did you go short?
2 days ago.
2 days ago. Okay. So what I would do right now is this. Now, do you have a buy stop in?
Yeah, I don't have a stop in as of this morning.
Okay, so what we're going to talk about here, right, is this, folks. When you're short and the stock has come down this much, what you should always do is you have a buy stop in. Like when things are going very fast, right? I can tell you, what I do is this. You get the equities, you short the equity that's coming down, you tighten them all the way up, so you give nothing back. Because, see, on counter-trend bounces, they're very fast, okay? Now, you said you only want another 70 cents. I'm going to say to you right now that, okay, that's great. You want another 70 cents, but you know what? I would put a buy stop in this second, okay, at 31.01.
Just a minute.
Okay?
Go ahead.
And so that just means that you're going to make money, period. Okay? Right. If it goes to 31.01, your stock, it's closed. It's not worth another 70 cents when this stock has just come down $4 in one day.
Yeah.
Okay? Now, what you do next is this. Okay, so let's picture that, my take is that this market wants to go a little bit lower today. So let's picture that in another hour and a half, this stock is down to 30, right? Well, what you do, you don't close it out, Dudley. Okay? What you do then is you take your stop, and now you want to get out of 30, bring the stop down to like 30.20.
Right.
Now,
let the market take you out.
Let the market take you out, okay? And on a trending market, down or up, that's how you basically grab more than you normally think you're going to get. Cooking, brother.
All right, thanks a lot, Tom.
Okay, man, you stay right there, folks. Steve Rhodes, Tom O'Brien, we'll come right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontofTFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin Burnstone Mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone Mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister Mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We got the Dow up 28, NASDAQ up 8, S&Ps are up 3. We'll see where this shakes and bakes, but this market is having a tough time holding up.
Yeah, now to go quickly back to Dudley, because he's brothers with a guy that used to play golf with in tournaments a long time ago. Wow, it seems like a long time ago.
Oh, isn't that cool?
Yeah. But so Dudley, I just want to come back to you now. One of the things so we're giving you, what Tom gave you, was the sell stop. So let the market take you out in case it starts moving against you. But, you're going to continue to move your stop down, in this case here, and stay in the trade as long as you can. Now, I know he's on the line. Because I know that he's probably listening now. What I really try to teach folks is that when you come into that D point, it's so important to understand how you're coming into it on an ABC down. And that's exactly what First Solar has here.
Okay.
The A point was at February 9th. The B point was down here. You gap down into that B point on February 14th. It does probably a 61% retracement. When you were coming to that D point, you were doing that yesterday. You gap down into it. When you gap down into it, you have a wide range bar into it, and you had volume. It's telling you that you want to do more than a 1-to-1 A to B equals CD. Doesn't mean you have to, but it's giving you that signal that you're going to extend. Yeah. And so the 1 to 1.272 takes you to the 2950 range down there. So that's why when you're getting that type of information, still let the market take you out, but just keep moving your stop down along the ways. It can get past 29.53 and get into 27.76 even. So I just wanted to give that piece of information out to to Dudley. Got to take care of Mike. Got to take care of.
Now so watch this, folks. This is how close this gets on these binaries, though. So on the one at 11 o'clock, that's when I put up 1150 or 1200 to make 10,000.
Yeah.
The number is 1367.50.
Okay.
And we're at 1368.50, and I get 4 minutes.
Oh man.
So I either lose 1,200. I'll make 10 grand.
Yeah. Now, what is that worth? What is it worth right now? I mean, can you?
It's flat.
It's flat.
It's flat. I wouldn't be able to. Actually, I'd lose 200. But I could close it right now.
Okay.
You could close it right now.
So, okay, just to give folks the understanding, because you're 1 point away, 4 minutes to go.
That's
you could go flat, or in essence take a 2. That which is really that was 10 contracts.
That's right.
Okay, so it's $20.
That's right.
Okay.
Well, no, you could have put up $12 to make 100.
Yeah.
That's the correlation.
Right. Yeah.
That's the correlation.
I just wanted to throw that out there.
Yeah. So
folks could take a look at it.
Let's see. So okay. So you see now, what happens with anything that's new? This is what I've seen is that.
And I think this is a really important point for people to understand.
Yeah.
Because you've been through this process
with the pro
a number of times, with the pro shares, with the direction shares.
That's right.
Now NADEX.
That's right. The opportunity is bigger at the beginning.
Yeah.
And the reason is that the pros will get a hold of this because, see, what I'd actually do is this. Is that, see how you're at 1368 right now, right?
Yeah, yes.
Well, if you had lined up, and this will happen, folks, if you had lined up monster contracts on this, which I did, all you do is you wait 1 minute beforehand and sell 200 contracts into it.
Yeah.
The 200 contracts into that side gives you that side.
That's right. Because you're just talking about just a real quick, 2 minute play.
Yeah, because, and what happens, folks, is that we used to do this on the OEX all the time. What happens when we traded the OEX, what would end up happening, and it was a lot more than just me. There was it was 4 or 5 of us, that if we were close to the OEX, what would end up happening is at that point, inside the OEX, which is just like Apple is now, at that point, the weighting structure was Dell, Sun Micro, Cisco, and Microsoft.
Yeah.
And if we were close within a point, all of a sudden, we'd just sell hundreds of thousands of shares right there and then. Because the OEX was a cash market also.
Right.
Gotta love it. You stay right there, folks. We're going to Santa Fe, Mexico. We got Kate Stalter coming up with the small cap roundup. Then Tucson, Arizona, Larry Pesavento. We got horses. We got other than the Wild West.
Everything. We got
Ken Shreves is coming up 3 to 4, and then back here 4 to 6.
Take care, folks. Have a great morning.